Hello, everyone. This is Jeb Hamwiger from GoldStockTrades.com. Today's March 6, 2012, Tuesday. It's about 1 p.m. And I wanted to give an update on some of the markets that we are closely following. Last week, when Bernanke was testifying, we saw a reversal in some of the markets in the first pullback of 2012 as some investors and the media were reporting that there was a fear that Bernanke would ease that he would ease up on liquidity measures and accommodative moves. We believe that was a diversionary tactic. Um, that day, there was about $700 billion that was loaned out to the 800 banks in the ECB of over $700 billion. The total LTRO is over now $1 trillion. So there is a lot of liquidity on the sidelines. The trends have changed in our favor. Recently, the 50-day moving average is moving higher. We have seen our first major pullback in gold and silver, but we still believe that the trends are still up, and that if you can get the GLD below 160, that it would create a very good buying opportunity. With silver, we did see it hit resistance, and but the 50-day is it's still above the 50-day moving average, and it's rising. So we're going to be looking to see if the 50-day is able to hold here in silver. And you know what's interesting was at the $35 level, a breakout at 35 was a key breakout, and we have this reversal and this fear of, again, once pervading of a lack of the stimulative funds that will push silver higher. But we see that a lot of this liquidity will come back into the silver market, and that this December 2012 bottom was a major bottom. We may see a formation here of a right shoulder in the low $30 area, or possibly in the high 20 area, where we would then have to move higher from there. So all this is doing, this recent action with Bernanke and the Chinese to talk down the recent liquidity measures, and because of a fear of a runaway move in commodities, all this is doing is delaying the inevitable. So we're going to see possibly a formation of a handle, and this may take a little bit longer, that upward move and the break of that downtrend. But we do believe that's going to occur sometime in 2012. So it's not a time to give up, but to actually look as it forms this right shoulder to add to positions. If you take a look over at the commodity index, we saw a major breakout in 2012 of that downtrend, and the 50-day and the 20 days moving higher, still way above the 50-day moving average. So this is really the first pullback that we are witnessing. And the dollar, we've seen a bounce in the dollar, but if you notice here, the 50 days beginning to slope downwards for the first time since this whole dollar bounce in 2011. And this is now acting as resistance. And if you notice here, the treasuries are beginning to slope downward. So even though we're getting this dead cat bounce in the dollar and treasuries, it's not a time to think that there's anything really significant. The resistance and the moving averages are pointing down. While if you take a look at silver, at the commodities, it's beginning to slope upwards. So gold is making important support here at the 160 area, and silver is testing the rising 50-day moving average. And here we're seeing if the dollar is again going to reverse lower at the 50-day moving average, and if the euro is in fact going to continue higher, and we'll see then a move out of the euro, out of the dollar, back into the euro, which would benefit the precious metals and commodity markets. Okay, so everyone have a great day, and thank you for visiting goldstocktrades.com.